Welcome to the Grand Rapids, Michigan, Kent County residential real estate market update with data through September 2021. My name is Rodney Constable. I'm a realtor with Century 21 affiliated out of Grand Rapids, Michigan. Year over year, home prices are up 15.9% in the Grand Rapids area, with the average home selling for $310,908. The average home 1 year ago was selling for $268,342. For years, I've heard people saying things like home prices can't continue to go up. Well, when I hear things like that, I think about the input costs to building a home. And some of the major input costs to building a home are land, labor, materials, and regulatory costs. So if somebody thinks that home prices cannot continue to rise in the future, what they're basically saying is that land is going to get cheaper and more plentiful. Labor is going to get cheaper and more plentiful. Materials are going to get cheaper and more plentiful. And the government's going to make regulatory costs of building a house cheaper and easier. And guys, when we just think about these four input costs, land, labor, materials, and regulatory costs, do we really think that any of these input costs to building a home are going to fall in the future? I doubt it. So if land, labor, materials, and regulatory costs are going to continue to go up, then home prices probably will continue to rise in the future as well. The average home is selling after being on the market for just 11 days. Now, when we compare that to the inventory of unsold homes, we can see that those homes have been on the market for an average of 57 days. What these two data points tell us is that if a home is properly priced, it will sell in a relatively short period of time, right now in less than 2 weeks. However, if a home is not properly priced for its condition, location, and amenities, that home will stay on the market for an extended period of time, right now just under 2 months. Next, let's take a look at year-to-date new listings versus the same period 1 year ago. So again, we're looking at January 1st of 2021 through the end of September, and then comparing that to the data from January 1st of 2020 through the end of September of 2020. And you can see that we are down in 2021. We're down 4.5% on the new listings versus where we were in 2020 for those first 9 months of the year. Now, when we look at this data in a numerical format, what we can see is that we've listed 8,072 homes so far for the first 9 months of 2021. But in 2020, even with COVID, we had 8,454 new listings that had come to market for that first 9 months. Now, when we go down this chart, you can see that basically the trend, and if we started 2016 and work our way back up, you can see that the trend most years here is that we're seeing fewer and fewer listings come to market, okay? And as a matter of fact, if we look at the 2016 numbers, for the first 9 months of 2016, there was 9,860 homes that had been listed in Kent County for the first 9 months of the year. That's 1,788 more homes than what we've seen listed so far for the first 9 months of 2021. So, guys, this is one of the very important data points here that, there's fewer and fewer homes coming to market, but yet the demand for homes in the Grand Rapids area is still very high. So just the simple economics of supply and demand are going to dictate that housing prices are probably going to continue to rise. Now, I'll have more data on that here in just a couple of minutes, but just that one data point alone, right? Fewer homes coming to the market, but yet the demand for housing is still high. That probably means housing prices are going to continue to rise, all right? But if we look at this trend, we go 2016, 17, 18, and move our way up here, you can see that for 2017, 2018, and 2019, there was about the same amount of homes that were listed for that first 9 months of the year. But the last couple of years, we have really dropped off here. And it's actually kind of surprising to see that in 2021, we're 382 homes behind where we were for the first 9 months of 2020. Even though, this year we have vaccines, where last year we did not have that, and the economy and the market are kind of opening up here, but yet we're still seeing fewer and fewer homes come to market. So just keep that in the back of your mind, guys, that the trend here over the last 6 years or so is that we're seeing fewer and fewer listings, and that is going to contribute to that problem of not having enough houses for everybody. And I don't see this changing anytime soon. Now, we just looked at the amount of listings coming to market. Now let's turn our attention to the closed transactions, okay? So again, we're looking at the first 9 months of this year versus the first 9 months of 2020. You can see that we are up in this category 2.6%. Now, when we look at this data in a numerical format, what we can see is that so far for the first 9 months of 2021, there were 6,892 closed transactions in Kent County versus 6,716 in 2020. So at least we can see that in this area, right, the closed transactions, the amount of homes that are actually selling have actually gone up. But as we saw on one of the previous slides, there's fewer homes for people to choose from, but we have seen 176 more homes closed for the first 9 months of the year versus what we saw in 2020. But when we drop down and started 2016, again, you can see 7,652 closed transactions for the first 9 months of 2016. That's 760 more homes that had closed for the first 9 months of 2016 versus what we have in 2021 so far. And you can see, again, the trend has been, as we know, right, fewer homes coming to the market. Well, it makes sense that we're going to have fewer transactions actually close as well. So definitely a bottleneck here, guys. We're a lot of demand for housing in the Grand Rapids area, but we're having fewer and fewer homes for people to choose from and fewer closed transactions as a result of that. Now let's look at the average months of inventory for Kent County, and here we have a little bit more data. The data goes clear back to 2013. Now what we can see is so far for 2021 we have 0.6 months of inventory. Guys, that's 18 plus or minus days, okay, depending on whether you're looking at a 30 or 31 day month here. So we're looking at roughly 18 days plus or minus of inventory, and when we look over the last 9 years of data, you can clearly see that at 0.6 months of inventory, this is half to a quarter of the inventory that we've been running for the last 9 years in Grand Rapids. But what I can tell you, and we'll dig deeper on this here in just a minute, so please stay with the video, guys, because this is super important for you to understand. But even, the best year we've had so far from an inventory standpoint in the last 9 years was 2014, where we had 2.3 months of inventory. But, guys, that is still really, really low inventory. But at 2.3 months, that's about 4 times the inventory average, right, that we have right now. So just to kind of recap what we've talked about so far, fewer homes coming to the market. There's still a lot of demand for housing in the Grand Rapids area, and the low inventory numbers, guys, this all points to the fact that housing prices will more than likely continue to rise in the Grand Rapids area for the foreseeable future, and we'll talk a little bit more about that throughout the balance of this video. So why does inventory matter? Well, as we can see here, if you have between 1 and 2 months of inventory, you probably are going to experience double-digit price appreciation on homes, and that is exactly what we have seen for many years here in the Grand Rapids area. If you're running between 3 and 4 months of inventory, you would generally experience single-digit price appreciation. If the inventory built to where you had between 5 and 6 months of inventory, this is more of a normal, balanced, or neutral market where you might experience some price appreciation, but it would more than likely be in the low single digits. And if you're under 5 to 6 months of inventory, this is considered a seller's market, and that's exactly what we have seen for many years here in Grand Rapids. If you're over 6 months of inventory, this is considered a buyer's market. And if your inventory built to between 7 and 8 months, that's when you would most likely experience single-digit price depreciation. And then if the inventory built to 9 months plus, that's when you would likely see double-digit price depreciation. So 7 to 8 months of inventory, single-digit price depreciation, 9 months plus, that's when we start to get into double-digit price depreciation. If you would like to learn even more about the likelihood of home prices rising in the future, I would highly suggest you watch my information-packed Will Home Prices Continue to Rise video, which is out on my YouTube channel. I will also put a link to that video in the description box below this video. So what are the next steps? Watch my Will Home Prices Continue to Rise video, watch my other YouTube videos, subscribe to my YouTube channel for ongoing real estate education. Please give me a thumbs up on this video and other videos that you like. Leave a comment on my videos and share my videos on my YouTube channel with your friends, family, and colleagues. Also, please feel free to connect with me via social media and call me at 616-258-4782 if you are looking to buy or sell a home in the Grand Rapids, Michigan area. Thank you so much for being on this video with me. I really appreciate it, and I look forward to seeing you in the next video.